voice you're listening to is the voice of Seyi, and as you know, I love to go by the name God did. Alright, so welcome to today's lesson, and today's lesson will be discussing understanding candlesticks, which is basically the language of the market. So in my previous video, which I believe you should go to watch before you continue this video, go to watch that video, then you can come back to this one. I spoke about understanding the charts, basically everything you can see on this particular screen right now. This is trading view, where we take our analysis before we take our trades on MetaTrader 5, right? So in that particular video, I spoke about everything you can see on this chart. I explained everything from the time frames to the candlesticks to the currency pairs to the tools to different things, just so that you can get familiar. So to understand this current video you are still on, you should probably after this or before this watch that particular one. Alright, so straight to today's lesson. This lesson deals with understanding candlesticks. In my previous video, first thing I mentioned was the fact that every candlestick, obviously everything you can see here, from this green, black, like this, like this, like this, like this, they are all called candlesticks. And I mentioned, which I'm going to repeat again, that candlestick basically represents everything that happens to the price of a particular currency or a particular coin, depending on whatever you are trading. If it's stocks, you get, so it's basically just showing you what is the current price or what was the previous price, right? So this is the previous price, this is the current price, and that's what basically candlestick explains. And I also mentioned critically, or very, very importantly, that one candle explains or shows you the emotions of the buyers and the sellers, the emotions, the decisions. It represents the emotions and the decisions of buyers and sellers. And why is why is this important? Because basically what you'll be doing whenever you're trading is trying to read the emotion of the market, or trying to read the emotion or the direction at which the market is going to, or it's coming from. That would make sense as we continue. Just pay attention, or let me repeat myself. So in that particular video, I mentioned different kind of time frames. Should go back to the video to understand. So this is the 1 minute, 2 minutes, 3 minutes, 5 minutes, and I mentioned that for a candlestick in each time frame, let me take the, I'm currently on the 3-hour time frame, let me take the 4-hour time frame. So I mentioned critically that for every candlestick in a particular time frame, a candlestick is formed completely at the hour of that time frame, or at the minute of that time frame. This is what I mean. I mean that every candlestick you are seeing currently on this particular screen was formed or completed for 4 hours. It took 4 hours for each candle to get complete. That means from this particular candle to this particular candle will be 4 hours. And that's why if you look, follow my cursor, if you look down here, this is Thursday, 9th of July 2026, 9 a.m. plus 4 hours will be what? 1 p.m. rather. As you can see, the next 4 hours will be 5, the next 4 hours will be 9. So each candle on this particular time frame, don't forget, it's not every time frame, but this particular time frame is 4 hours. If I go down to the 30-minute time frame, it will mean that each candlestick took 30 minutes to form in the 30-minute time frame. The significance of this will be much more clear when you start trading, but as a beginner, or as you're starting your trading career or trading journey, it's important that you have this is just basic knowledge. Do you get? So each candlestick takes, on this particular time frame, on the 30-minute time frame, right, it took 30 minutes for each candlestick. If you can check the time down here, it took 30 minutes for each candlestick to be formed. Do you get? And so that means, why is this important? You know, I mentioned that each candlestick represents the emotion or the decisions of buyers and sellers. I'm going to go into candlestick anatomy also in this particular video, where we'll be talking about anatomy. Science students will basically understand. I think everybody should basically understand that is the structure of the candlestick, which is going to help us to understand the closing, the opening, the emotions and decisions of buyers eventually. So that should be clear. Let me leave this particular page and show something very, very vital. Alright, so we're going to candlestick anatomy now. Basically, we're going to be talking about the structure of a candlestick. obviously, as you can see here, they are basically rectangular shaped, right? So let me draw something like that. Now I also want to mention that some people would ask, oh, I'm saying, does my trading view have to be blue and red, and rather green and red? Because you see that so many other trading charts, trading charts, right, are usually I wanted to show you just like a typical trading chart. Let's show you a typical trading chart, but it's not so vital. So a typical trading chart, usually when you come to your trading view for the first time, I'm sure that's it to be. If you're just open trading view, it's very easy to open. You can open with your Google account, right? So if you usually see a green and a red candle, just follow me through. So you usually see a green, come on, change now. So you usually see a green and a red candle. I don't know why this thing is malfunctioning, but yeah. You usually see a green and a red candle, but it doesn't necessarily mean that must be what you use or you stick with. Basically choose a color that fits you. For most traders, I'm sure most traders usually change the color from green and red. Currently, if you can look at my chart, I'm not using green and red, I'm using green and black. And my previous video, I explained that already. Alright, so in this video, we're just going to be talking about the anatomy of a candlestick. We are going to be discussing the open and close, how to read what a candlestick represents. Because if you want to follow market movement, you want to know where the direction of the market is heading to or is coming from, right? It's important that you know this anatomy. So I'm going to be starting first with the bullish. Now, what does bullish mean? You must have heard me say bullish. Bullish means bullish means when we talk about when a trader says, oh, the market is currently bullish, it means the market is currently going up. To the layman, it means it's going up. To also the layman, it means the market is buying. That means price is moving in the upward direction. Are you with me? That means if I say, oh, the market is currently bullish, you should be expecting movement like this. It means the market is currently bullish. If you understand that way, right? Now, if I say the market is bearish, just think about it, that the market is selling. That means the market is going in this particular direction. Do you get what I'm saying? So that's basically what we mean when we say, oh, something is bullish, or when we say something is bearish. Do you get it? Alright, so I'm just going to be saying that once again. Bullish, bearish. I didn't know what it is. So if I say, oh, I'm starting with a bullish candle. Bullish candle. Now, I'm using green because in the default trading view and in most default trading charts, the bullish candle, you know what the bullish is now, is a candle that indicates that the market is going up. Now, for a bullish candle, let me just draw what we have. For every bullish candle, we could have something like this. I'm going to explain everything. Just pay attention. Now, everything here can be customized, right? I can change this particular straight line you're seeing. I can change the color. That's why I also explained the tools in the previous video, so you can go back there and check the video and understand everything. So I can change this particular color, can change it to green, anything that suits me. The important thing is to understand what exactly I am seeing every time I come to my chart. Do you get it? Some will use their bullish candle to be red, while their bearish candle to be orange. It's just what they can read. Do you get? So you're basically setting your chart to whatever you can read and whatever you can easily understand. I hope that's clear. So let me get into the anatomy of this particular candle. So for a bullish candle stick, This is a bullish candlestick. So for a bullish candlestick, right, the opening, please pay attention, the opening is usually below the close of the candle. Now this is what I mean. Let me assume you're on a 30-minute time frame, which we're currently on. That means if this candle opens, it will take 30 minutes for it to open and close. Now if it opens at this point, can you see? Let me delete this first. If it opens at this point, if it is a bullish candle, if it's going to close, if it's going to end as a bullish candle, the close is going to be at this particular point. At the eye of the open. If this is the opening, right? This particular line is the opening. If this particular line is the opening, right? Then to identify if it is a bullish candle, the close is going to be at this particular, is going to be higher than the open. It is going to be higher than the open. It cannot be below. Why? Because we are saying a bullish candle goes up. So let me assume the market opens at this point, price opens at this point, right? If it's going to be a bullish candle, you'll find out that it's going to close at this point. Now don't make the mistake of, oh, the color matters. The color necessarily doesn't matter. It only matters if you have customized your own chart. That means if you can come to my own particular chart now, I can share my chart with you, and if you don't understand what I'm about to say, you might not be able to read it, because I may not be using the default blue and I may not be using the default green and red. I don't know why I'm mentioning blue, since blue is my favorite color, by the way. So I may not be using the default green and red. Some are using different charts, different colors. But for me to understand that, oh, this particular candle I'm looking at is a bullish candle. If it opens, today starts, right? Today starts and the market opens at this point. If the market closes higher than the point where it opens, it can close here, it can even close here in 30 minutes. You get what I'm saying? Depending on how market moves. That's not our business in this particular video. It can close like this. So the moment it closes higher, right? The moment it closes higher than the point where it opens, that is what? That is a bullish candle. I'm very sure that is clear. Let me put myself. Let me label it. Open. So that in case you want to take a screenshot or you want to write things down. Close. Come on, get out of here. What's wrong with you now? Come on, exactly. So now, the moment the candle opens at this point, for me to identify that is a bullish candle, that's to close at this point. So I think that's clear about the bullish candle. Now let's go to the labeling. I drew some long vertical stuff the other time. Now they are called wicks. I'm going to spell it out, but let me draw it first. They are called wicks, and this is the spelling. Wick. Now this is the body. This is a wick. Alright, then this is body. Alright, clear, right? It's very easy. The market opens at this point. Market opens at this point for 30 minutes, for 1 hour, for 2 hours, whichever time frame you are on. It opens, then it closes at this point. It means a bullish candle. Why? Because this is the opening, this is the close. Right. Now, this is the body, this is the wick. Body is quite easy. Let me explain what the wick shows. The wick shows, what the wick of any candle shows is the fact that, let me assume when market opened at this point, right, then sellers basically tried to push the market below like this. So they tried pushing this thing below, but then this week shows that the market did not stay in this range. Rather, it went back up to this point, then pushed down like this before it closed. So wick basically shows the momentum of the market, or the price movement. That is, when the market opened at this point, let me assume this was the opening of the market, right? Sellers got into momentum and tried pushing the market down, but then buyers pushed it back up to this point. Then sellers could only push it here before the market closed. You see why a candlestick basically shows you the emotion and the direction of every buyer and seller. So it's not magic. When I mean it's not magic, I mean trading is not magic. It's basically just showing you a decision of billions, thousands of people. You get what I'm saying? So when the market opened like this, some guys decided to sell the market and they sold it to this point, but then the buyers came back up. So you can basically, it's just like I don't know if it will make sense if I call it like a thermometer, where it goes down like this, and when it comes back up, it shows you that there was a point where the market was at this point, but it's no longer there. But now it's moved back up. There was a point where the market was at this point, but it was no longer there. Then it's now closed at this point. You can call it a bullish candle, right? Let me go ahead to explain a bearish candle. Maybe, so if you're confused, you should be able to get it with a bearish candle. Don't forget what I mentioned a bearish candle is. A bearish candle is a candle where it's, okay, I'm going to mention what a bearish candle, but what is bearish? Bearish basically means selling, that is, it's going down. So what is a bearish candle? A bearish candle shows you for a bearish candle, the open is usually higher than the close. I mean, that should be, it's just going to be the opposite of the bullish. Sorry. No. I think this one should be pretty simple and clear. If you understand the bullish already, then it shouldn't be difficult to understand this one. So for the bearish candle that we are on now, it means this is where the market opened from, right? But then sellers got involved in the market, and because for us to identify if it is a bearish candle, it means at the end of the time frame, whichever time frame we are on, the market closed below the open. So let me give you a typical example. This is a bullish candle where the close is usually higher than the open. But now let me say the market closed like this now. Alright, I'm going to come to my Duolingo. Alright, so let me assume that the market, closed at this point on 30-minute time frame. Then for the next 30 minutes, right, the market decided to open at that same point. Before the end of the time frame, you won't know if it's a bullish or bearish yet. You just see market going. I'll show you on the chart when I'm done. You won't know if it's bullish or bearish yet, because market opened here, closed here. The next opening obviously will be here, because it closed here. It cannot come and open here, because it's a bullish. This is a bullish candle, so it's closed here. If it's going to open here, that is, this particular open is not going to be here. For us to know if it is a bearish candle, it means that the close now came and closed here. Let me even widen this. It's now closed like this. Can you see? It's now closed like this. So it opened here, it's closed here. It can close in any way, as long as the close is below the open, right? As long as the close is below the open, it is a bearish candle. As long as the close is higher than the open, it is a bullish candle. So that is where you identify, but that is candle anatomy. Now, same thing, it can have wicks. So it's not every candle that have wicks, obviously. right? It's not every candle that have wicks, but it can also have wicks. And what are wicks? Those vertical lines that is usually on top of the candle. Now it can choose to have, it can be very long. If it's very long, it just means that, if it's very long, it just means that, oh, the price momentum went all the way to that place. The price momentum went all the way to this place, but then it was pushed back down. So what would this mean if you've been following me carefully? It will mean that, oh, when market opened like this, it went all the way up. At least buyers got involved, right? But did not close here. Then came back down here to close. Now it can close without a wick, it can close with a wick. I'll be explaining what that means in subsequent videos. When you see two candles and the wicks are equal and all that, there's a way to understand all that candlestick patterns and all. But for today's video, we're just going to be understanding candlestick anatomy and basically what is a candle saying. Just a candle saying. What can I read from what a candle is saying as the buyers and the sellers' emotion? Do you understand what I'm saying? So this is a bullish candle and this is a bearish candle. Bearish candlestick. This is a bearish candlestick, this is a bullish candlestick. Let me come again. For a bullish candlestick, the open is usually lower than the close. The close is higher than the open for a bullish candle. It opens at this point, it closes at this point. Don't forget, I already mentioned from the chart that the close is dependent on the time frame. So if it means that if I'm on 30-minute time frame, the moment this chart opens, the close is going to be in the next 30 minutes. After it closes in the next 30 minutes, it's going to open again and close again for another 30 minutes. It goes on like that. If it's a 3 hours or a 2 hours, it's going to open and to take 2 hours before it closes. You see why many times you have to be patient, you have to be able to understand this thing so that you don't just jump into a particular. Imagine now, let me just use an example. It doesn't exactly work like this, but let me use an example of I want to predict that when this market opens, it would close bullish. That is, it will close above the open. But then it's not yet 30 minutes and I wasn't patient enough. Then I went ahead to jump into the trade and say it will close. And then the market came back down like this. It opened up back down. Then it came back and closed here. Now if the close is below the open, it means what? It means it's automatically a bearish candle. Now, yes, it opened like this. Yes, it opened like this, and probably it was even going up. Right? It was probably even going up. But because I did not wait, I jumped into it and I said, oh, it's a close here. And then the market went all the way here and came all the way back here and then closed. And then closed at this point. You know I've lost. So that is why you have to be very, very careful and understand exactly what is being explained. Do you get? Very, very careful and understand exactly what is being explained. And that is that about candlestick anatomy. So the wick basically, I think I've explained what the wicks are. The wicks basically shows you the price momentum. What if the wick is this small? Because sometimes you see very, very small wicks. That is, the wicks will just be somewhere like here. Can you see? It means the price just pushed a little bit up and came back down. Now, so I'm going to explain what does a long wick mean. A long wick means, for instance, this opened here, this closed here. The moment it opened, a long wick means there was a particular point where the buyers were very, very much involved in this particular candle, and then they bought up to this point. There's some wicks where you see, and I think there was even one. There's one on this particular chart now. I was not going to enter the chart yet, but let me just show you for the sake of understanding. Exactly. Look at this particular wick. Right. What does this mean? It means, now you are in a 30-minute time frame, right? It means when this particular candle, which is a bearish candle, closed here, that means this is where it opened. I think, let me just even go right into the chart already. Let me use this. This is a perfect example. So For instance, let me start from here. Market opened here, right? I could start from anywhere, but let me start from here. Market opened here. The sellers push it a little bit. That's why we have this particular wick. The sellers pushed it a little bit here. But market did not stay there, then it closed. You can see this closed without a wick. That means the buyers closed here. The sellers weren't able to push it down. It closed without a wick. Now, if this is the close, the next opening will be from here. This discrepancy is just a little slight displacement. The next opening will be from here. So that means it opened at this point. Sellers tried pushing it a little. They couldn't push it much. But then buyers got involved. That's why it's green. Obviously, that's my color. But if it's going up like this, it means it opened here. Because it closed here, the next candle opened here. Now, buyers tried pushing it up. But then sellers pushed it back. But buyers were still a bullish candle because the close is above the open. Now, it closed here. The next candle will be opening where? There as well. It opened here. Buyers tried pushing it a little bit. That's why you can see this. But sellers said no. Now, sellers pushed it back all the way here. Buyers were able to close it at this point. But it's still a bearish candle. Why? Yes, you're right. Because the close is below the open. I hope you're getting it. This is the close. Now, this is the open. Now, sellers pushed it all the way here. But buyers got involved, bought it all the way back up. I'm heading to the pattern. Bought it all the way back up. It closed here, it opened here, it opened this particular candle. Buyers tried entering again and bought all the way here, but sellers says no, pushed it back down to this point. Buyers fought back and closed here. Now, the next candle opens. So, at the next candle opens, buyers and sellers are usually active. That's why there's a saying that the market never really closes unless on the weekends for Forex and stocks, right? But why that is said is so that you don't kill yourself over a particular loss or so that you can take a gain. The market always moves. There's no time where the market is stopping. It can be slow, but it's always moving. That's just something you should know. So now it opens at this point. Now buyers tried buying up here. You can see this long buy. But sellers said no. Sellers pushed it back. And look at where they pushed it to. Actually, they pushed it down all the way down. See, they pushed it from this open. After buyers bought a little bit, they pushed it all the way down to this point. But buyers said no. And buyers pushed it back. So if for this candle to have changed to a bullish candle, it had to be higher than the open, because this was the previous close. This is the new open. For it to have been a bullish candle, it had to be higher than this, but because it's not higher than this, it's lower. It ended as a bearish candle. But if you check my overall analysis, I'm analyzing, and that's why it's important that you know this, so that my analysis shows that this point where sellers pushed back actually is a buy zone, and that's why I have a setup at that particular point. But that is by the way. So I just want you to understand what the candlestick is saying. Candlestick basically is showing you the decision of every trader on that particular market at that particular time. Now, for a long week is showing that this is a very strong buy. So you should be expecting a buy from this place. Obviously, you cannot just take this and then jump into market and enter a trade. But it's part of what we call confluences. Confluences means your bias, your edge. Why are you taking that particular trade? So if I see a very long wick on a particular candle, I know that it means that something is going on at that point. If it is on a bearish candle and it is a long wick to the downside and it's a bearish candle, I know that, for instance, this is a bearish candle, right? Because the open is higher than the close. So it's a bearish candle. I know that it means buyers really want to get into this price, into this market, but then sellers are not agreeing. So it's a tussle. And that's what happens at every time, right? I want to see if there's anyone like that on a bullish. There's a bullish wick like that. Now that's what a long wick shows, right? A long lower wick. There are times whereby you will see a a long higher wick, right? I'm looking at what our candle is exactly. So for instance, this is my demo candle now. The wick is at the top. What if it's this long? What this basically just tells me is that buyers bought up to this point, but sellers were able to push it down back. This means the next candle or the next movement of the candle, series of candles, is most likely going to be a sell. Because for sellers to be able to push it back here, it's most likely going to be a sell. But that's not the only way you take your trade. So before you can jump into trades and say, is Seyi that said this and that. That's not the only way to take your trades. But understanding what each candle says at different time frames, can give you a very strong edge. And that is why this video is very, very important. I don't know how long this video is taking already, but that's why this video is very, very important. So that you can see, on the 30-minute time frame, there's a very strong buy. It means, and then I analyze with several of my other confluences, and I say, okay, let me take my buy from here. Because for buyers to be able to push this candle back, it means that. Do you get what I'm saying? So it's very, very important that you start out your trading knowing these things. Now, what does a small wick mean? A small wick, let me give you an example of a small wick. Basically just means it's very strong momentum. For instance, it's probably a weekend. Look now what the displacement is about. Alright. For instance, this particular small wick, market opened here, market closed here. That's a bullish candle. Now market opened here, buyers were able to buy small. Look at how long sellers sold for, and look at the next series of candle just started selling. So can use that as a confluence, but you have to definitely trade with other confluences, understanding candlestick anatomy. So this small wick just means that the buyers were able to do a small price movement, but sellers were aggressive. Do you get? Now there are also candlesticks. I'll get into candlestick pattern in my next video. There a long body. What does a long body also mean? A long body like this means aggressive sell. A long body, I'm looking for aggressive buy. A long body like this means aggressive buy. It means, especially, and it would really matter on a higher time frame. Now the lower time frame, the long body or the long wick may not exactly matter. But if you come to the higher time frame, like I said, I think my next video I'm going to explain time frames, but I'll be explaining multiple time frames by that point. But my previous video, I explained what time frames are, and I explained the higher and the lower time frame. So you can go back to check that. I've mentioned that already. Now the higher time frames will include the 4-hour, the daily, the weekly, and the monthly time frame. And on this kind of time frames is where you want to really pay attention to what price is really doing or what the candlestick is really saying. So if I come to the higher time frame from the 4 hours, and then I see a very long wick or a very long body, for instance, something like this. Look at this long buy here. Basically tells me that buyers are interested in this market. One, or it also tells me that there's something that caused that long buy. Probably it is close to a POI, which is what you can see here. A POI is here, close to a POI, or there's a particular news. Same thing what a long sell says. A long sell tells you that sellers are really involved in this market. Now look at this long sell from here, this long body here. It means there's an aggressive sell. You can expect the next candle to be a sell. It doesn't always work like that, but it can just be a very good expectation. Do you get? If it aligns with your other confluences, you are in for good money. Now this is even on a 4-hour time frame. If I go to the daily time frame, you'll see beautiful. You see very, very long candlesticks, right? Look at this long one here. Obviously, because I've minimized, look at this long one here. It just tells you that, buyers are really, for instance, it tells you here that those that are involved in this market are really, really aggressive. Look at how long they pushed the market down. So you can expect the next candle to also go down. The next series of candles to be very, very bearish. That is, it's going to go down. That is what you have here. Now imagine I have analyzed this. This candle goes down, and then I analyze this to be another block. You might not understand what other block is yet. Probably though. Imagine I've analyzed that Come on, change now. Sometimes I need to know what's wrong with trading view. The trading view or it's my network. Oh my god, I have to go and configure this thing back. Alright, so now I've placed this here. So I'm expecting that when market gets back into this point, it should give me a sell. Why? Because of these long sales. That's what market did. Go back into my POI, right, and give me a sell. Now for this particular place, it didn't work. If I say you should get back into this POI, so that's why I say you don't just trade it on isolation, right? You think about it or you trade it with other confluences, but it's just very good that you have it as your part of your arsenal. Do you get? And that's that for the long upper wick, long lower wick, small wick, the long body. The long body either indicates a strong buy or a strong sell. Do you get? And that is that. So obviously for the higher time frames, imagine for the higher time frames, right? It's the candlestick anatomy is much more important or much more prominent on the higher time frames. What do I mean? I mean you want to pay attention to the candlestick anatomy or the candlestick, I won't call it pattern yet, but the candlestick movement on the higher time frame than the lower time frame. Because like I explained in a particular video, I think my previous video, that on the lower time frame there are a lot of noise, right? I mean 5 minutes is things happen in 5 minutes than 4 hours. So 4 hours indicates much more stability, much more confidence than the 5 minutes. For instance, all this inner candle now, they're basically on the lower time frame. So do you get what I'm saying? So that's that about that. Alright, so to check your understanding, let me show you something. If you can answer this question correctly, then I think you really paid attention into this class. Now if you see a candlestick pattern like this, don't know why this thing's taking forever before showing. I think this is my network actually. So I want to show you a particular candlestick and I want you to be able to answer who won. So I'll get the answer in the comment section. Do well to engage. Just answer the question, who won in this particular candlestick movement? Come on. Oh. So who won in that particular candlestick movement? Don't forget, pay attention to where did the price open, where did the price close. It doesn't necessarily have to do with the color. Maybe I should even put color at all. So what's wrong with not a color itself? I'm done with the video, right? I just want to give that analogy. Alright, so I said I'm not going to put a color to it. I'm going to make it very, very neutral. But just tell me, I'm going to indicate the open and the close. So you tell me who won or where is the price headed to. So let me assume, so price started from here and this is the open. Obviously this is the open, then this will be the close. and this is close. So if price opens here and opens here, and this is candle A, so what is candle A? Is candle A a bullish candlestick, or is candle A a bullish candlestick or a bearish candlestick? Let me know your answer in the comment section. Is it a bullish candlestick or is it a bearish candlestick? Now if price closes here, right, price closes here and then opens at this point, opens at this point. Okay, let me make it 3 there. I was just going to give 2 before, but opens here, close at this point, and this is candle B. What kind of candle is this? I'm never going to draw the open and close of this one. What kind of candle is candlestick B? Don't forget, this is where it starts with. Price opens here, closes at this point, right? Obviously, it will open here, close at this point. What kind of candle is candle B? Then, let me draw the last one. Let me make this one tricky. Let's palm the diagram. Now, for this particular one, let's start from A. Price opens here, close at this point. What is candle A? Price opens here, close at this point. What is candle B? Price opens here and close at this point. What is candle C? What is candle C? Let me see your answer in the comment section. What is candle C? Right. Then you can also mention what the wicks indicate, but you might not necessarily have to do that. Alright, so that will be that about that for today's video. If you have not subscribed to this particular channel, do well to subscribe so that you can learn more. Don't forget, trading is a skill and you should learn it. You should get better at it. It's not just something that you say, oh, it's difficult, oh, my money will go, oh, blah 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 blah. Like every other skill is something you should learn, something you should, or you can learn, something you can get better at. And if you're on this channel, you're on the right path towards learning. Subscribe, like this particular video. More videos are coming up. On my next video, I'll be explaining multiple time frames. How to, I think I did a little bit of that in the previous video, how to bring multiple time frames together to take your trade. We're already getting to the interesting part of this particular course, actually. In no time, if you have been following me from the beginning, you would soon be taking trades by yourself, understanding what the trading is about and how to take your trades and why traders trade whatever you trade. Alright, so that's that for today's video. Stay safe. The voice is the voice of God did, and I say God bless. Toodles.